Hi, Michelle Kilman, your dependable lender for residential mortgages. Today I'm going to talk about assumable mortgages. What is an assumable mortgage? An assumable mortgage is a type of home loan where a buyer takes over the seller's current mortgage. And so this can apply to FHA, VA, and USDA loans. In order to find out if your loan is assumable, if you don't know, you need to contact your current lender and they can tell you if that is an option available to you. So a buyer does need to get approved in order to assume that current loan. So that is something that is required. And then if you do get approved, you will assume the seller's interest rate, which can be a benefit if it is lower than the current interest rate that is out there. And so that's why these are becoming a little bit more popular. You're hearing about these more often because we're in a little bit of a higher interest rate market currently. And so I wanted to educate about assumable mortgages. So there are also less fees to assume a mortgage because you aren't going to pay the upfront mortgage insurance costs that you typically do when you start a brand new FHA, VA, or USDA loan. And then the loan term would also be for however many years the seller has left on that particular loan. So if they have 10 years left, that's how long you would be paying for that loan. So there is some possible downsides of an assumable mortgage. So if that current mortgage balance that they're holding is lower than the sales price, the buyer will have to come up with the difference out of pocket. And so they can do this by using a savings account, 401k account, trust account. Possibly they can also get a second mortgage to cover that difference. It does depend on the numbers, and it does depend if they're able to qualify for that assumable mortgage plus a second mortgage and be able to make both of those payments with their income. And then also for VA loans, the VA benefit does stay with the loan. It does not stay with the person. So if the veteran seller needs to use their benefit to purchase their new own home, passing their loan to someone else may not work for them. So keep that in mind as well. If you're a veteran that does have an assumable loan, that is something that is really pertinent for you as well. So if you have any other questions regarding assumable mortgages, please message me and I will answer.